Hello and good morning, listeners. Welcome back to Almus Market Mornings with Shikhar Garg and Jayaram Krishnamurthy. Now, folks, equity and FX markets are still awaiting cues as to the action continues to stay limited, but it's the yellow metal which is rallying quite significantly, breaking about $2,100 in a liquid market timing, unlike the previous instance, is quite interesting to watch out for. We have the ECB meeting, Powell testimony, and a few more key data points for the week. So, JK, what do you think? What should we be expecting? How should the financial markets be reacting to these set of events and updates during the week?
Good morning, Shikhar. Yes, actually, we do have a very busy week, but yesterday was perhaps a rest before a storm, that kind of thing. We did not have any major data from any of the regions, and but interest was whether the yields which had fallen heavily on Friday would follow through. But that was not to be, as a heavy supply of fresh paper by corporates in US weighed on the bond prices. So we had an uptick in the two-year paper by about 8 basis points, and 10-year also went up by about 5 basis points. Now, also supporting the yields was Atlanta Fed President Bostic, who is a voter. He says he sees a rate cut only in Q3. Now again, it's like who is chasing whom. Market was exuberant, looking at 6 rate cuts, and then Fed was saying 3 rate cuts. Then market slowly got down to 3 rate cuts. Now Fed is going towards possibly 2 rate cuts and starting only in Q3 and not even June. So that is the way things are moving as far as the rate cuts are concerned. So Bostic is not happy about the way prices are climbing briskly, still higher than what they have seen, and inflation still to be under control. So that is the basis on which he is seeing. So I think we have to watch the bond market very closely. The intermittent fall in the yields should not mislead us, and there is still a huge amount of borrowing that the US government has to make, and they have been borrowing only short term through T-bills. When they resort to longer term, that is when we will have the music, because I think in my view bonds have not yet seen the top, but right now we are in a kind of very easy market situation where bonds are rallying, gold is rallying, equity is rallying, Bitcoin, of course, no bounds for it. So that's how we are currently having. Yes, as you said, we have a good amount of data to watch out. We have PMIs today across regions, and ISM services from USA. That's important because services form the 85% of US economy, and therefore we will focus on scenario like orders, employment trends, and prices. Even factory orders in US are also expected. More important, however, will be Jerome Powell's congressional testimony. Most expect him to toe the hawkish line that he has been holding so far on interest rates, wanting to see more consistent moderation in inflation. Besides, the resilience in US economy gives the Fed enough headroom to wait for more signs of easing inflation. So an unchanged tone from Powell can keep the markets range bound still and avoid the more important ECB meeting on Thursday and jobs data on Friday. We also have, of course, UK budget on Wednesday, not to be left behind. So GBP will take a lot of cues from that, because that has also been very rangy for a long time. China, there was an annual Chinese parliamentary meeting, but the announcements so far have not been any surprise, and therefore there's been hardly any reaction from the China markets. Of course, for the stocks, it was a day of profit taking yesterday after sizable gains recently to record highs and ahead of the key events as well. Dollar has remained in the range, no impetus to break out on either side. Hopefully, the upcoming events will provide some reason to move it either way directionally. As you said, gold made another thrust higher. Yes, moving in a thick market, or rather a very liquid market, gives it a solid footing. I think now even on a correction, 2070 will be a very strong support zone. People will be looking forward eagerly to such dips to get long. Slowly, the FOMO is setting in as far as the gold is concerned, but for it to rally even further towards 2200, which has been our target for quite some time, we need a clearer indications on where the rates are going. We also had inflation from Japan. Today, the headline inflation for February rose 2.6 from 1.8% the previous month. But the core inflation was at 3.1%, and rather previous months was 3.3%. Japanese officials latch on to anything that is lower, and they immediately, even the official was out saying that they are far from declaring Japan is out of deflation. So overall currency is in a range, but I think the upcoming events is what we look forward to. Not much to talk about rupee, which did not get much inspiration from the marginal weakness in the dollar index after US yields had dropped. PSU banks, importers quite active. Some FI buying was also seen yesterday, as we have seen some sell-off in the equities from the FIIs. But in the absence of major cues from domestic economy, rupee also awaits the macro data from US economy this week on manufacturing and employment. And that should be on the radar of the policymakers there as well. So there is, however, an expectation in the market that the year-end factor on 31st March will work in favor of some more strength in the rupee. But that will depend on whether the central bank is comfortable about its appreciation. At the same time, with asset markets at extremely elevated levels, should we see a sell-off from foreign investors to repatriate profit for the quarter ending March, particularly the Japanese investors, or rather people who are putting into Indian assets by carry trade to Japan? There can be some buying also. Investors may tend to take profit ahead of the general elections that are coming up in April, May. So interesting times ahead. A lot of things are not settled, and we need to get direction as far as currencies and the our own rupee is also concerned. Only thing that looks quite bit in a trend is Bitcoin, followed by gold. Thank you.
Okay, that was quite good. And yes, folks, gold is having its own footing right now. And as JK mentioned, a move about 2100 puts it in a strong hold, providing supports around 2070, and setting up the expectations for more buying as well in gold coming in. But having said that, we still need some further clearer indications for it to reach above the 2200 target, as JK has mentioned. Other than that, bond markets should be watched out for to get the cues on the market participants' expectation with respect to rate cuts. Although there has been discounts for two rate cuts right now rising, but it needs to be seen with yields still staying higher. What sort of a move does the market participants expect? Powell's testimony today, if it remains unchanged, can keep the markets ranged as we've been seeing, but the elevated asset markets or the elevated levels in the asset markets can bring in the possibility of the repatriation of profits in the coming time. So that's been with the global markets. On the domestic front, as we've been seeing, dollar rupee has continued to stay in a range, and we expect it to continue for the timing. That's it for today, folks, and we shall come back again tomorrow with another round of updates. Thank you so much for joining.
Thank you, Shikhar.